Show, and we also have Agam joining in. Mr. KBS Anand, MD and CEO of Asian Paints, is on the line from Mumbai. Mr. Anand, thanks for taking this call. Can you take us through any of the price changes that you've announced recently and what the move is behind them?
Frankly, we have done about a 2% price reduction effective Saturday. It's essentially due to the drop in effective raw material prices, partially on account of marginal strengthening of the rupee, plus drop in commodity prices we have seen over the last quarter. So taking both factors into account, we have reduced the prices by about 2%.
Sure, sir. Shareholders, of course, would have been hoping that this reduction in input costs would actually come down to your operating level and help you increase margins, but you decided to pass it on. Is that a function of the weakness in the demand in the market, and how would you describe that?
I don't think the demand scenario has really changed from our perspective. It's simply that we feel beyond a certain point, very high margins are unhealthy. It gives competitors a leeway to enter. So we look at it differently and change accordingly.
So, Mr. Anand, we know that we've seen very good volumes from Asian Paints, particularly in the third quarter. What do you think this price cuts could do for volumes? Do you see an increase in volumes given the fact that you have carried on price cuts, or you don't think it will be a substantial change in terms of increase in volumes?
It will be about the same. I don't think there'll be any real difference in volume growth. Anyway, we are doing it to the end of the third quarter, so it's going to be a reflection on what will happen in the first quarter of next year rather than this quarter.
And when it comes to the price cuts particularly, is it more towards the economy segment or is it more towards the premium products? Or according to you, is this more spread out evenly?
It is spread out, but probably more towards the economy segment.
Okay, so that means that I can assume that your margins will not be as hit in terms of, when you take these price cuts, because, of course, your premium segment enjoys higher margins for that matter.
See, when I'm saying a 2% price reduction, I am taking it as a point of, from the point of view, it's a price reduction in my overall margin. I'm talking on overall price margin reduction.
So at the EBITDA margin level, sir, how much of an impact could this have, if you could give us some sense?
No, it's 2%. No? It's a 2% price reduction. It's a 2% margin reduction in reality.
Okay. So it'll be a 2% EBITDA margin reduction as well.
Yeah.
Have you passed on the entire cushion of lower input prices, or do you think you can do more in the coming quarters, going by how demand shapes up?
It's partially related to demand. It's partially related to our estimation of how raw material prices would go because of the relatively low demand we have seen in chemicals in China. Commodity prices have weakened over the last quarter. And on the basis of that, those estimates we looked at the price reduction. Depending whether they weaken further or they strengthen, changes in pricing will occur over the next quarters.
Sir, what's your estimate on volume growth itself? You're also going to be starting a new financial year soon, and despite the benefit of lower input costs, the challenge for the industry really has been to get volume growth back at healthier levels. What's your outlook?
We have been growing at approximately double-digit volume growth this year, which is considerably lower than the first decade of this century, I agree. So, frankly, it relates to overall economic growth. Since the economic growth, the GDP numbers have slipped a bit in the last 2-3 years. I don't think we can grow very much faster if the economy doesn't grow faster.
So when you say double-digit growth for FY 16-17, are you hoping to be in double digits towards the lower side of it? Or are you hoping to, scale it up? Or should we just expect low double-digit, which would be around the 10 to 12% kind of volume growth number?
Yeah, I mean, if it was high double-digit, it would be like the first decade when we're talking of volume growth. So it's definitely not high double-digit. But I mean, the numbers are still to go, and we don't really give forward numbers. But in the basis of the first 3 quarters,
Yeah, Mr. Anand, actually, I wanted to ask you a little bit about the crude oil prices as well. I know that we've seen a little bit of an inch up for crude oil, and I know that this is directly related to your raw materials. What is your outlook here, and how do you think this could impact your margins going forward?
We have estimated crude at between 35 and 40. If it goes up further, raw material prices will automatically go up. If it drops, because people are talking between 20 and 50, it's very difficult to judge. If you have better estimates, please help us.
Mr. Anand, sir, I'll come back to you. I think you were just completing your point on volume growth. I know you won't give a very specific number in terms of forward-looking guidance, but you were saying going by the trend of the last 3 quarters, if you could just complete that point, sir.
Sir, so for 2 quarters, we indicated double-digit growth. In 1 quarter, we indicated high single-digit growth. So it gives you an automatic indication.
Okay, all right. So we'll leave it on that note. Thank you so much for joining in and talking to us. So that's ITC. Stocks under pressure, Ragam.
Yeah.
Okay, all right. We'll take a quick break on that note. We'll come back on the other side with more on the markets.